Welcome back, everyone. This is Thomas Triple T Tie with another new bullish crypto analysis. This is part two of a two-part daily series or weekday series on the market analysis. I just finished and uploaded the first part, which is the chart analysis for the equities market and the trends with crypto. And this is the second part for the macro news that may impact the crypto and equities market. Before we dive in and take a look at the macro news, remember this is for edutainment only and not to be considered as financial advice. Additionally, I would really appreciate it if you could help spread my analysis by smashing the like, ringing my bell, hitting subscribe if you haven't, and share your thoughts and comments in the comment section to help the YouTube algorithm spread my analysis. They're pretty simple to understand to help newbies and also people who may not, who may want to have simplified analysis to help them make more informed decisions. So with that, let's dive into the news. I'm going to start off with this article because it's similar to something I want to talk about. If you haven't seen my earlier analysis on the charts, please check that out when you want to, because it does show some chart analysis that will help drive home some of the points I'm going to make now. So the market, the Dow dropped more than 1,000 points in Wall Street's worst day of the year. I mentioned in that prior video that it's been a long time since I've seen a day like this where crypto and the equities market are both so red. But what I want to, in this article, they talk about several different things, but the one point I want to bring up is this. Why did the market drop? Okay, so yesterday the market rallied. Why did it rally? It rallied pretty much exactly as Jerome Powell said, that they're not going to be hawkish to raise, to move towards a 75 basis point increase in the near future. The market pumped. So when the market pumped, that's a reaction. It's people are reacting with their emotions. And so those things are not sustainable. And I mentioned that in several of my analysis yesterday for different coins. But so they're reacting emotionally while it rallied. Probably a large portion of the investors had short positions. So when price moved up and people are holding short positions, they have to cover their margin calls because otherwise they're going to get liquidated. And so in order to cover it, they have to buy more of whatever stock or crypto to give back to the funds that they borrow or the stocks they borrowed. And so that drives the price up even more, right? So now think about this. The market has been put down, and then now you have this rally. So if I'm an investor, I'm thinking, oh my gosh, what a great time to take some profit, right? So they start selling, right? So they waited and they sold today when they realized after a night of sleep and some stuff, they realized, no, that's not sustainable. So they started selling. So if you look at the charts the analysis I did earlier, Bitcoin dropped right at the market open fast because the equities market is not open 24 hours a day. So if I was an investor in both equities and crypto, like Bitcoin, if I need to liquidate some cash or whatever, I'm going to liquidate in the market that's already open, not the one that's about to be open. So you can see some of that changes. So, big rally and then the big sell-off when people realize it's not sustainable. So I want to highlight this paragraph here. So what changed last night and today, because investors flipped 180 degrees? They basically said, quote, "The tea leaves are hard to read right now," Frederick said. But this could be a sign that the market capitulation, this could be a sign of market capitulation where investors are panicked to the point of throwing in the towel. Capitulation, he added, can also indicate that we've reached the market bottom. I disagree. I don't think we've reached the market bottom yet, because the macro factors and environment factors are still there. You only reach a market bottom when some of those issues and challenges have been addressed. Well, they're not addressed. They're lingering, and their compounding impact on the market is gonna push the market even further, in my opinion. And I've held this belief for months now. Some of my targets have been so low, so it's when people were saying that they're bullish and market's going up, I still held the belief that it's still gonna drop for months. So I don't think the bottom is in for the market yet. That capitulation, if you look at the capitulation in the crypto market, that's not a capitulation. If you go back to previous crashes, major crashes, capitulation is a huge capitulation with giant volume. That was not a capitulation. So totally disagree. But hey, it's a perspective. This next, let me zoom in here. Magnify so you can actually read it. A new report this is from Inside EV. New report suggests Tesla will dominate S&P 500 by 2030. Whenever I read an article that is from a publication that specializes in that particular subject, for example, Inside EV, what do they specialize in? EVs, right? So if it's to their benefit if they share reports or articles about that's positive, mostly about the EV market. So just like crypto, like Bitcoin Magazine, how often do they put out articles, positive articles about Bitcoin? A lot. So you gotta take things with a grain of salt here. But let's go through this. They're talking about how Tesla has been growing rapidly. They're an automaker, but they're getting to robots. They get a battery. They get into power units and all that stuff. So, and AI, and Elon is involved in different companies, etc. Solar, and so they're very bullish on Tesla. I'm pretty bullish on Tesla. I've been bullish on Tesla since they first started, even when they were near bankruptcy. So I do agree, but I'm not so sure about dominate. 2030, we're looking at 8 years ahead, right? Technology changes so fast. So I think Tesla will be a force, going in the next decade, but I'm not sure about dominate. A lot of the technology moves really fast, and technology can be replicated, or in some cases, like the Chinese market, they just corporate espionage, steal them. 10-year yield, Treasury yield surges as high as 3.1, hitting the highest level since 2018, and yield moves up when prices drop. Price drop because people are selling. So if the interest rate go higher and people hold U.S. dollar, for example, they can use that to make money versus having to wait 10 years to earn some interest. So that's why some of these the bond market is horrible. That's why you see these rates going up, these yields going up. So because people are selling and they're probably holding cash or other assets. Binance is backing Elon Musk's Twitter bid, boosting crypto believers' version of a decentralized web. Binance is not a decentralized web. Binance is a centralized crypto exchange. Sometimes you read these articles and you're like, what? Yeah. So anyways, Binance is they're planning to invest $500 million in equity to fund Elon's $44 billion bid to buy Twitter. And Binance is not alone. There are others as well. Mainly probably the PayPal mafia group. Why the market is taking Powell's softish economic language so hard? Former Fed official Roger Ferguson I watched this video of him talking. He's got some interesting points. Inflation may have peaked. I disagree. I don't think inflation has peaked. In fact, on May the 11th, the new CPI will come out, and we'll see 8.5. I bet you, CPI will come north of 8.5. Not only, in my opinion, not only has it not peaked, and it's got room to grow, but I think it's going to sustain at a high rate longer than the Fed would like. And another key point here, even with its notorious blunt tool and the Fed Chair Powell expressing confidence in a softish landing, the Federal Reserve will not be able to keep markets from being volatile and the economy from a rocky period. I agree with the rocky period. I'm not so sure about the softish landing. Powell took the 75 basis point raise off the table. He shouldn't have. I think he should have left it on the table and do what he needs to do to get inflation under control. And so taking that off of the table, and if he eventually uses it, that just makes him not look good or trustworthy. But I think all options should be kept on the table. He did say that they're going to use all the tools they have, but he shouldn't have said that. Long-term outlook remains positive, but for the next 18 to 24 months will be rough. I agree with the time frame. 18 to 24 months is going to be rough. But long-term, I think we'll be fine. I totally agree with that last point. According to CNBC, e-commerce stock plummet as consumers pull back online spending. Why are they pulling back on online spending? Because, one, inflation. When inflation goes up, price goes up along with it, and people are probably being more cautious because they need to shift their spending towards things that they need versus things that they want. And you can see Etsy, Shopify, Wayfair, Postmark, and other e-commerce retailers fell on Thursday. Well, a bunch of people fell on Thursday. A bunch of companies fell on Thursday. E-commerce transactions have declined 1.8% from a year ago. Another contributing factor is because people are not sitting at home due to COVID lockdowns anymore. They're out spending money, out traveling, eating out, and etc. Workers' output fell 7.5% in the first quarter, the biggest decline since 1947. So what is workers' output? So the government measures the workers' output, and they compare that against other metrics. So let's take a look at this. Here we go. So they measure the labor costs, the expense of labor from various companies, and they measure that against their productivity, how much they produce. And so the labor costs increased 11.6%, and productivity fell 7.5%. That's a problem. So what kind of problem does that cause? Well, companies have to. So if it costs companies more for labor, to pay their people, employees, cost them more to pay for the employees to produce, but yet their production drops, that means they're going to have to raise prices to cover for those expenses to bring in more revenue. So what does that do? That contributes to inflation. So you see how this inflation is not peaking. We're far from peaking. Weekly jobs claim increased to 200,000, well above the Wall Street estimate. So another factor that is going to be a dent in our fight against inflation and the economy. The economy still looks pretty healthy, just so you know. It still looks pretty healthy, but inflation is taking a toll. Mortgage rate hits highest level since 2009. And 2009 is the year right after the financial market crash. 30-year fixed rate averaged 5.27. That is very, very high. And that's up from 5.1% a week ago. So that's going to cool off the housing market slightly. But remember, supply of homes for sale, it's still low. And even though it's going to cool off buying of homes, the real estate market a little bit, the supply is still low and demand is still high. So guess what? It's going to continue. Jamie Dimon scolds Fed, says Cold War is back in Russia. Nothing new here. Basically, he says that the Fed is behind the ball. We already know that. And by the way, speaking of Jamie Dimon, he recently softened his tone on crypto, saying that it has some utility from his prior year comments, how evil crypto and all that stuff is. So I'm glad he's changing his tone. Biden showcases deficit of progress in a bid to counter critics. Let me magnify this up for you. So he rightfully so. I mean, like Biden has done a decent job with the economy. Let's give him credit where credit's due. The economy is strong. However, when he's touting his how he got the national debt, somewhat from running away again. It ran away under Trump, and he got it under control. So credit for him there. But guess what? To the average Jane and John Doe in America, they don't care. What they care about is how much is my grocery going to cost? How much is the gas in my tank going to cost? How much is, Netflix going to cost? That's what America cares about. The average American cares about. So kudos to him for, having a strong economy, but he's got to get back to dealing with the inflation. And I know they're working on it. And Jerome Powell's got a really tough job. But this is kind of tone deaf, just citing the national debt at a time when people are facing tremendous inflation, and it's tone deaf in my opinion. China's economy is going backwards. I cover China almost every weekday, so according to CNN Business, China it's something we gotta keep an eye on. China's gigantic service sector just contracted at the second sharpest pace on record as COVID lockdown hit business hard. No surprise there. You have a COVID lockdown. You have very strict zero COVID policies. People can't work. You haul people off into temporary camps. You break people's door down, drag people out. Yeah, I mean, like, you're not people are not working. They're not producing. They're not contributing to the overall GDP, and so no surprise that the service sector contracted to the sharpest pace, second sharpest pace on record. So that's no surprise there. There's this index, the Caxton Purchasing Managers Index, a closely watched indicator for assessing the state of the economy, plummeted to 36.2 in April from 42 in March. So they're tanking. 50 is where the line is drawn. 50 indicates a contraction. So think about it. If it's 50, if it falls to 50, that indicates a contraction. What do you think a fall to 36 gonna look like? So keep an eye on China. China is one of my biggest worry when it comes to what happens to the global economy. Beijing orders stress test as fear of Russia-style sanctions mount. Okay, so let me dive into this for you. So a stress test for you, for those who don't know, a stress test is when like a bank or a company or the government, they test out different scenarios on what impact it would have on their financial sector, the economy, etc. Like a bank stress test is, do they have enough capital cover? Like, let's say, do the banks have enough money in the bank in case customers want to withdraw all their money, like reserves and things like that. But for an economy, they got to test different things. Financial is one of them. But why would they want to stress test this? Because they're looking at Russia and what the West did with their sanction and Russia and the impact it had on Russia's economy, pretty much sent Russia back to the Stone Age. And financially, they still have their war and stuff, weapons and stuff. But why would they do this, right? So Russia illegally attacks Ukraine. The West reacted, and the way the West reacted was more expeditious than what China expected. So why would they stress test? Well, what about Taiwan, right? You can see Ukraine and Taiwan, very two similar parallels there. Russia attacks Ukraine, China attacks Taiwan. The West does similar thing to China as they did to Russia. They're trying to prepare. That's what it's going to happen. And if you look at the volatility in the South China Sea with those islands and how China claimed all the islands belong to them, even though other countries said, no, they're ours. So they're stress testing. So the confrontation with China, it's a matter of when, not if. And when that happens, you think the market right now is bad? When that happens, it's going to be even worse. So, stress test away, China. I sometimes struggle with, I buy a lot of equipments, like technology equipments, and some of it comes from China. I love Chinese people. I love the companies in China, but the government, I don't know, And so I struggle with buying stuff, and because when we buy stuff from China, we literally are sending our money over there to help them build up their military and modernize their equipment and be stronger as a superpower, if you will. And so I struggle with that sometimes. I don't know. I tried 1 year to not buy Chinese products, and it was hard because so many things are made in China. But yeah, anyways, that's why they're preparing for it. They're preparing to see if they did. It's like playing chess. If I did X move, what would happen? So, Bank of England hikes interest rate to 13-year high, seeing inflation hitting 10%. And I mentioned Bank of England, I believe, yesterday. So this just confirms that they're moving their rate up 25 basis point, and inflation at 10%. That's high, and so what happens over in Europe is going to impact the U.S. and impact other countries. So got to keep an eye on all these. According to The Guardian, Sweden says U.S. has offered security guarantees if it applies to join NATO. So if you've been following what's happening in Europe, countries that are bordering Russia, they're concerned about being attacked. So Sweden and Finland are two countries that are working to expedite their membership to NATO. And membership to NATO can take years and to work through all the various different countries that belong to NATO. So they're working to expedite this, and there are talks that it could be done within weeks. So it's one of Putin's worst nightmares coming true. NATO expanding right on his border. But think about this: like if you were Sweden or Finland, like looking at what's happening over in Ukraine, wouldn't you worry? I would worry. Oh, here it is. Sweden and Finland NATO membership could be approved in just 2 weeks. That's really fast, really fast. I think it was yesterday, or the day before, I mentioned about a Citibank trade that caused a major quote unquote crash over in the European market, 8% loss in the Swedish stock index. And They didn't say much about it when I reported it, but it was due to a fat finger error. What a fat finger error is basically when you're inputting some numbers and you might have typed something incorrectly. That's what a fat finger error is. It's the same error that how the term hodl was misspelled. Some guy drunk he meant to type hold, but he typed hodl, HODL instead of HOLD. That's a fat finger error. COVID-19's death toll is nearly 3 times higher than reported, whose data suggests. So what they're saying is that the number of deaths across the world is much less than what the real toll, death rates are. So they're thinking that it's about 3 times that amount. So, because different countries have different criteria for reporting, not all countries report correctly. Some countries like China, and Russia, have their own way of reporting their own numbers, fuzzy numbers. So 3 times. Sadly, COVID toll in the U.S. reaches once unfathomable number, 1 million deaths. Just to give you context, the Spanish flu from 1918 caused, around 650 or so million thousand deaths. So I know population has grown, but think about this. I think it was 650. I know it's like be under 700, but I think 650 is a good figure. 650,000. Today we have more science, we have more medication, we have vaccine, yada yada, right? But yet we are almost double the number of deaths compared to the Spanish flu in 1918. That's incredible. Yeah, it's a very sad number, and this is just the U.S. alone. If you total the world, it's been challenging. I think it's one of the toughest period in my life, and I'm sure it's for many of you as well. Anyways, on the topic of COVID, New York City could bring back mask mandate and vaccine checks if hospitals come under pressure. They're coming under pressure already. New York City increased COVID alert from low to medium this week as infection rates surpass a rate of 200 per 100,000 people. There's a sub-Omicron variant. It's called BA.2.1, I believe. There's a .1 after that. It's more contagious. I believe it's like 30% more contagious so far. And also, it's more resilient to vaccines, and that's causing some worries among experts. So New York is just one place. There are others, San Francisco, and other states. So it's spreading. Here's let me magnify this for you. Mayo Clinic doctor says new COVID variant evades vaccine. Here it is. The BA2 BA2.212.1. I totally messed up that number. Yeah. But yeah, that's the one. And here it is, 30% more transmittable. And they're not as their vaccines are not as effective toward them. So that's concerning. And infection rates and hospitalization rates have gone up in the U.S. as a whole to near worrisome rates. More of this variant here. I'm just going to skip this because we already talked a lot about it. But this fact is interesting here. The BA.2.12.1 was first spotted in New York, and it's spreading. I think in the next few weeks we'll see more increases. You can see here this data here, while the BA.2 variant continued to drive the majority of the infections, making up 61.9 of the total cases for the week ending April 30th. The .12.1 has been increasing steadily. The subvariant accounted for 36.5% of the cases last week, up from 26.6. So it's grown faster than its brother. So just something to keep in mind. This is a controversial topic for some people. My purpose is to share with you news that could impact the market and the economy. So what you do with your mask and vaccination, that's up to you. This one, I think I've mentioned this before, but in case I haven't, the severe COVID-19 may cause similar cognitive deficits as 20 years of aging. And what they're talking about here, this is, let me give credit, live science. What they're talking about here is long-term illnesses as a result of having COVID, having contracted COVID. And one, it shrinks your brain, and it also has caused heart issues, and the cognitive damage it does to the brain can age you by 20 years. So what does this have to do with investment? Well, if your cognitive age by 20 years, you may not be able to process things as well or as effectively, and that may impact your investment decisions. So take that for what you will, but something to be thoughtful about. This one is according to CNN. I think this is the first article. Yeah. So we're back to the first article. I know that's a lot of tough news. Not the best news you want to hear, but it's important to keep an eye on these main topics: Russia, China, Europe, America, COVID, inflation. Those topics, and of course Russia invasion of Ukraine. Those topics are the macro factors that are having the most impact on the economy and on the markets right now. So right now, and you should always look at that, not just right now, but whatever major factors are impacting the market, you want to stay on top of them. So I hope you found it helpful and valuable. Feel free to smash the like, ring my bell, hit subscribe, and share your comments to help people and help spread my analysis. I'll see you in the next video for Bitcoin. Peace.